Good evening, everyone, and thank you for joining us for this session of Giraffe Connect. It's a very rainy evening in Bangalore, so welcome to everyone. Uh, Quick background. I am Prateek Goyal. I head strategy at Giraffe. My background is I'm a civil engineer from NIT Surathkal, then an MBA from IIM Ahmedabad. And then over the last 10 years, I've been in financial services. I was part of investment banking at Royal Bank of Scotland, originally at Hong Kong, and then capital allocation and portfolio management with RBS in India. Then I was with a private equity fund, which used to invest in financial services, leasing, and logistics. And from 2016 to 21, I was with a venture capital firm, early stage investing to about $500,000 to $1 million. We would have invested in about 50 odd startups by that point. And then from mid 21 onwards, it's been a journey with Giraffe. I'm very happy to introduce part of our senior leadership and head of risk, Ankit. Ankit, if I can request you to maybe give a quick background.
Thank you, Prateek, and thank you everyone for joining the session. I'll keep it very short. So I am heading credit at Giraffe. I have around 15 years of experience across banks and financial institutions. And I have worked across different profiles, majorly in credit and risk in these organizations. So I think, Prateek, we can move ahead with the presentation.
Perfect. Before we go forward, in case there are any questions, I encourage the audience to type that in the Q&A box that would be visible to all of you, either at the bottom of your screen or at the top of your screen. So please do put up your questions, and towards the end of the presentation, we'll try and take as many of them as possible. Moving forward, I think the idea before giving both of our backgrounds is that Giraffe essentially is a platform where investors can come and create a fixed income portfolio for themselves. They can access opportunities between 6 to 20% yield range from 30-day to 3-year tenor and create a robust fixed income portfolio across yield, tenor, and credit risk. The idea is that in India, typically people have been investing in public markets, people have been investing in gold and real estate. Now there is an opportunity where they can participate in credit risk, which is widely prevalent across the world, and can create and diversify their own portfolios and can generate returns without being subject to market volatility, as is the case with public markets. What you have on screen is the team that we've been able to put together at Giraffe. Saurav and Vineet, both our founders, have rich experience in financial services. Ankit and myself, we just introduced ourselves. But if you look across the board, Vikas, Jaiprakash, Apurv, Vasu, all have spent time in financial services in various roles. And the idea is to put together this team so we can curate and bring high quality opportunities for our customers and for our investors. We've been able and we have been fortunate to raise some capital led by Accel Partners, which is a very established venture fund in India and abroad. We've also been supported by some marquee entrepreneurs, Siddharth Shah, Dharmil, Ramakant Sharma, as well as a couple of family offices, the Mankekar family offices and Capital A. We have few angel investors also with us, largely from the financial services domain, which we are very thankful for and which we consider as a validation of at least our idea. This is to, again, further elaborate that India has been typically investing their money in first in FDs, and then it moves upwards to all the way to public markets. Now, the way it evolved was 91 opened it up, and then people started to participate more and more in public markets. Mutual funds today via SIPs are very accessible. Most of us are familiar with them and consider them a key part of our own portfolios. That allows them to generate wealth, that allows us all to preserve our capital and move forward and move upwards, as well as actually create savings for the later part of life. The key element we believe that is missing in this is a robust line of fixed income. While there are certain safe assets that will always be there, be that gold or fixed deposit, that remains subject to inflation, and in case the inflation rises, then you're not sitting on any real yield that gets translated. That is why credit opportunities between that 8 to 20% spectrum is a good part of the portfolio where you can have returns which are not market linked, which are highly predictable, which will come to you at defined time periods, and they sort of act as cover for you in case there is market volatility. What we've tried to put together in the two graphs that you see at the bottom of the screen is basically how inflation has moved and how Nifty has moved, just giving you a sense of how market movements will change the returns in the public markets, but in fixed income, they are not subject to such volatility, and that's why we believe they will be a key part of the portfolio. The graph on the right, which sort of shows where these products lie, which is FD and savings being the safest one and lowest one in terms of yield and return. And then as it moves rightward, both the risk and the return increases. So every increase in return comes with increased risk. So all these products carry some amount of credit risk. We encourage everyone to sort of study them. Our idea is, by taking some incremental risk, does it allow someone to create a better portfolio? And the way you would see in this graph, at least, is the short tenor credit and structured credit form and fill an important gap between the safer products, which are FD, savings, and public market equities. We have also been fortunate to cite some research, and there have been a couple of research which have been done globally, largely led by Yale University. They've been saying that alternative fixed income, which is the definition for structured credit, they are now forming a more and more critical part of the portfolio. In their definition, at least a 10 to 15% exposure to alternative fixed income is quite critical for having a healthy portfolio. What is the challenges before someone can access structured credit opportunities? Largely, if you go towards the bond market that is prevalent in India, that has been defined by government bond availability. A lot of them are sub 10% and are very long tenured ones, tenure in terms of 7 to 10 years. So for people to access their money in 3 to 5 years or lower, that has been one challenge. Then there have been a number of wealth firms as well as certain investment advisors and other channels which have been able to take these structured credit products to ultra HNIs, but there the minimum ticket size has generally been greater than 1 crore in a single opportunity. So the participation, the access becomes a challenge. And then, of course, there is documentation and monitoring that can be now eased out through technology and through the advent of startups, which are then creating more and more convenience for investors. What we are trying to do at Jiraaf is making these opportunities accessible. We have a team that works hard to curate these opportunities, takes them through a very robust credit process. And in the later half of the presentation, Ankit will walk you through them in good detail. We try and make the journey of a customer also convenient, both from a documentation standpoint, from a monitoring standpoint, and from their ability to actually understand the risk that might be prevalent with any of these opportunities that we bring. We've covered some part of it, so I will not spend some time on that, but I would like to focus the attention of the audience on this particular slides. Ultimately, what are the products that we are talking about? So we are talking about corporate debt, which is effectively debt given to all forms of corporate. These can be large as well as mid-sized. They are typically between the 12 to 36 month tenor bracket. The yield on them is somewhere between 18 to 15%. And they're typically backed by some form of collateral or security, which can be a charge on the asset, which can be a charge on certain specific properties that might be attached to it. Next is invoice discounting or supply chain financing. Most of the businesses require working capital, and they are defined by the underlying trade a business might have. So we will have products between 30 to 90 days and typically 9 to 14% yield, all trying to fill the working capital gap, which is emerging quite fast in our growing country. This is widely prevalent, especially for MSMEs, where working capital can be a bottleneck to their growth. So we are trying to figure out a way on how we can help them, and meanwhile ensuring some returns for our investors. Leasing is effectively when a company does not want to purchase an asset, but wants to use a particular asset over a period of time and pay out the capital of that asset through a monthly rental. The most simple example of that is, many of us would have experienced this, that when you try and buy a house, it's always a very heavy capital investment. So all of us begin our journey by renting a house, and there you are happy to pay a monthly EMI. just to access or just to be able to use that house. That's the simple concept in leasing. Venture debt, a lot of us would have heard in the news. Startups require a lot of capital, largely to grow their business, largely to support them in certain strategic endeavors. And that's the more risky form of the products that we do. Nonetheless, there are some fairly good opportunities where startups who are doing well need that debt capital without diluting their equity to promote and to grow their business. This is a little snapshot of our journey so far. As a platform, we began in September 21. Over the last 18 odd months, we have now had more than 100,000 registered users with us. We have processed about 1,675 crores of investments. More importantly, we've been able to return more than 1,000 crore to customers and to investors who have participated so far. We are a team of 80 people, largely based out of Bangalore. Ankit, maybe now's the time for you to take our customers through the process that we have from a credit standpoint.
Yeah, thank you, Prateek, and thank you everyone for joining the session this evening. So, as Prateek explained in the previous slides, that at Jiraaf we bring high yield alternate investment opportunity. So when we say high yield, so there has to be a high level of risk associated with it and a probability of losing your capital as well. However, we at Jiraaf, we have multiple checkpoints where we do assess the borrower before taking them live on our platform, and we have a rigorous process in place. So broadly, we have, three different stages of which every deal has to go through. The first stage is what we call the credit assessment stage. Then it goes through the deal structuring stage, and finally the monitoring phase. So basically at the credit assessment stage, what we do is basically we understand the borrower requirement. Then we assess the borrower on various risk parameters. And we have an in-house risk model, which we have developed, where we give a risk scoring to each of these borrowers. And basis that, we identify what kind of risk is associated with the deal or the borrower. And then we define what could be the possible mitigants in terms of structuring the deal. And once that structuring is done, and then it goes to the documentation phase, and then the deal is listed on the platform. And throughout this process, so we have multiple teams which are involved. The investment team, which brings the deal which brings the deal. Then we have two level of approving committee. The initial level of approving committee is called in principal approving committee. Then we have once it goes through this phase where we basically filter almost 80 to 85% of the transaction which comes to us. And post that, it goes to a detailed due diligence level where we do a total thorough due diligence of the borrower. And post that, it goes for a final IC committee review, which is called investment committee review. Then at the investment committee review level, we decide on various, the covenants and the deal structuring. And post that, it goes through the legal due diligence and documentation, and the deal goes live. I think we can move to the next slide. So basically, in the credit assessment process, we try to answer three main questions. So the first question is, what are the major red flags in the company? Whether we should work with this company, and these are assessed basis the various parameter, like we can see over here, like the credibility of the management, what are the various legal or the governance aspect which has to be taken care of, what is the market feedback about the company, what are the various bank statement and the financial statement analysis. So basically, we just try to screen out the company if there are any red flag on these parameters. So once any borrower, once any borrower is passes through this stage, it goes into the detailed evaluation stage where we go into the detailed financials analysis of the company. We look into the business model, what is the unit economics, what kind of profitability they are making. I think previous slide, yeah. And what is the market position, what kind of market they are catering to, whether it's a B2C, B2B company. So these are the basic parameters, and where we do a thorough analysis of the borrower. And last, the most important part is how the repayment will happen and how the investors will get back the money. So basis that, I mean, there are different sources of avenue of repayment which a business can have. One is that business is generating cash flow from their own operating cash flows. Company has adequate cash balance on the balance sheet, or company has a history or ability to raise debt funding when and whenever required. Whether the shareholders has supported the company whenever there is a requirement of funds for the company. So basis this, we identify what are the different sources of the for the company to recover or to pay back the investors. So at this stage, we basically thoroughly understand the borrower requirement, what are the risks associated with the borrower, what are the avenues for the borrower to repay the money. Then, Prateek, next slide. Then we go to the deal structuring stage, where we identify this risk. What are the basic, broad risks for the transaction or at the borrower level? And then we basically define what are the collateral so that we can mitigate those risks. So for example, when we are working for for a real estate project, so what kind of collateral are there in place? What kind of security cover is there in the place? What is the sellability of the underlying product? So these are the key risk aspects which we evaluate. Basis that, we also define our covenant, which basically helps us to ring fence the cash flow and ensures that the borrower or the underlying asset is able to repay the investments. Prateek, last slide. Yeah, go to the next slide. So once we do all the structuring and the documentation are done and the deal goes live, so our job as as Jiraaf, we doesn't end there. So we basically monitor all this borrower on a monthly basis. So we get their MIS, we get their monthly data, we get market feedback, we get data, information from public sources. We engage with the client on a monthly basis, and we do a thorough check of all the covenants. What is the financial position of the company, if it is deteriorating or it is getting better. So there is a monthly monitoring process which is there. Every month, the entire committee which sits with all the borrower, we identify any risk is there or not. If we find any risk in the borrower, we cut down the exposure or we try to reduce the exposure over the next couple of months to ensure that our investor interest is safeguarded. So basically, it's a total feedback mechanism which basically goes into our credit risk model. So, and it's a continuous process at Jiraaf. So this is the entire process which, in a nutshell, which we follow at Jiraaf as far as credit assessment is concerned. Prateek, now I think we can open the floor for Q&A.
Perfect. Thank you, Ankit. Once again, maybe to reiterate to the audience, in case any of you have questions, please type that out in the Q&A box that might be visible either at the bottom of your screen or at the top of your screen. We'd be happy to take questions, time permitting. And the first question, Ankit, is from Mr. Mani Kumar, where he's asking, is Jiraaf safe for all investments? And vis-a-vis mutual funds, are mutual funds are safe, or Team Jiraaf is safe? I think that's the question.
Prateek, I think you are the better person to answer this question.
I think all products, Mr. Mani Kumar, carry risks. You will also have mutual funds of various kinds, large cap, small cap. They will also have varying degrees of risk. Similarly, at Jiraaf, you will find products which are safer than the rest. All products carry risk, but our endeavor is to allow you to create a fixed income portfolio across the risk and return spectrum. And that's why you will see our products from 8% to 20%. Needless to say that 20% or 18% or anyone in the higher yield category will carry more risk. But I don't think this is a straight comparison. So much like everything else in financial services, a diversified portfolio would work better.
So our recommendation would be, if we have to recommend anything, both mutual funds should be a part, and our alternate investment product should be part of your portfolio.
Mr. Shambhu Singh actually is saying, speak with Hindi, please. Mr. Shambhu, I think we will try and incorporate as many languages in our webinar as possible. Thank you for that feedback. We'll try and do our best and incorporate more and more languages as we go forward. Mr. Vishnu has asked, would like to know how this business model works for Jiraaf. is it through commission? Mr. Vishnu, yes, you are right. We have a fee element that comes from the borrower. At the moment, the platform is free for any investor that is participating. What that allows us to do, though, is that we are trying to have a transparent as well as fixed fee mechanism across our products. Needless to say, the investor is the one who's making the choice which product they like. So at the moment, our income, you're right, comes through a commission. However, I think as we broad base the model, we'll also try and make this very transparent to all our investors. Mr. Arun Kumar has asked, while credit assessment of monthly financials, if you find any risk, will you update us regarding that after we subscribed?
Yes. So till now on the platform, we were not updating this. But going forward from next quarter onward, we will be sending quarterly updates to all the investors about what is the current status of the borrower wherever they have invested their money. So we will basically try to highlight what has changed over the next one quarter, how the financial has moved, and how do we see the risk in the borrower. So those kind of brief, I would say, highlights of the borrower, we will start sharing with the investors as well.
Just to add, Mr. Arun, our idea has always been that we want to make our investors more and more familiar with the risk that anything is carrying, both pre and post investment. So you will see all updates moving in that direction, where we'll try and highlight the risk associated with any particular opportunity more and more, and through the journey till that capital is out. Mr. Mahesh has asked, some of the deals are repeated every month. So every time does Jiraaf do an approval process?
So, so basically, if our approval process is more like a bank give a sanction to a borrower. So what we do at the time of initial approval, so we say for example, we assign a certain limit to each of the borrower, and as long as the disbursed amount is within that limit, so we don't have the entire approval, the entire end-to-end approval process, what I had explained in one of the slides. So irrespective of that, we have a monthly review on the exposure, whether we want to reduce it, whether we want to increase it. But no, the entire detailed approval process is not there, though annually we do a detailed financial and thorough analysis of the borrower and the limits. Hope that answers it.
Yes, it does. There is a question by Mr. Arnav Tiwari. We noted why all investment opportunities are not offered to everyone. We have 3 separate accounts registered, but all the accounts get different opportunities. I think, Mr. Arnav, all opportunities are offered to all investors. What sometimes happen, of course, is that we open certain opportunities for a little while for first-time investors for a time period which might be exclusive to anybody who's not invested yet with Jiraaf. So our endeavor there is that more and more people participate. And what we have realized, and we've been fortunate, is that we get a lot of support from our existing customers, and any short-term opportunity gets subscribed very quickly. So in order to give new investors a fair chance, we open certain opportunities for a little longer while for first-time investors. This is a question by Mr. Sanjay Gupta. Do you always keep collaterals for your investments? What is the percentage of collaterals with respect to investments? Are the collaterals curated and selected for safety? And this is a question then that is repeated several times. What are your defaults till date?
So I'll answer the second question first. So till date, it has been 0 default. In terms of collateral, again, it depends upon transaction to transaction. So mostly we have at least 1.2 to 1.5 times cover or collateral for all our transaction. In case of higher risk, I would say deals like real estate, we generally have more than 2x type of collaterals. So all our secured products, we have collateral at least 1.2 to 1.5 times.
Perfect. Mr. Sandeep has asked us, if possible, please clarify on the recent SEBI circular dated June 16th. Mr. Sandeep, SEBI has come out with clarifications for the online bond platform providers on 16th of June. This is in continuation with the circular that SEBI had sent in November 22. At the moment, we are also going through the circular. However, rest assured, all products on Giraffe remain compliant with the product guidelines as is laid out by that specific regulator. And for all our existing customers, their portfolio and their investments remain intact and can be happily processed as they would have expected to be do so. We welcome all regulation that comes. So we think actually fundamentally SEBI is moving in the direction that will promote debt markets, and this is a good move. However, it is still too early for us to comment on it deeply. We are also going through the same. The next question is by Mr. Ramakrishna. It would help in increasing the confidence of investors if Giraffe makes some investment themselves, especially long tenor investments like plotted development and real estate financing.
I think you would like to take, or so?
I think, Mr. Ramakrishna, we actually would be happy to make investments, though I think we are still to hold it on our balance sheet. We would need specific licenses to which we have actually applied for. And then as a platform, we would like to participate and risk share with our customers. So far, though, what happens is that a lot of our senior leadership, Ankit and myself included, we do participate in the opportunities that come across on the platform. And as part of our personal portfolios, you can be rest assured that Giraffe remains a very critical part. We do hope that in perhaps another 6 to 12 months, we would be in a position to risk share in every opportunity that comes up onto the platform. Mr. Hitesh Kshatriya has asked, is there risk-based categorization of each deal like credit rating?
Thanks for the question. So we, as I explained in one of my previous slides, we do have an internal model where we categorize each of these counterparties in terms of risk, high risk, low risk, very high risk. And slowly we are also moving towards where we will start displaying that on our platform as well. So maybe in a couple of months time, we will start showing a broad level risk categorization for the deal, which will be listed on the platform. So we have an internal scoring model where basis around 40 to 45 parameters, we assess the borrower, which includes all financial parameter, management risk, business risk, conduct risk, and basis that we come up with an holistic score, which help us to categorize under broad risk categories.
Perfect. Mr. Chetan Birari has asked, what's the minimum and maximum amount of investment required? Mr. Chetan, the minimum amount is 1 lakh rupees for any specific opportunity. There is no maximum amount for any particular opportunity for any particular investor. It is, I would though say that, and once again reiterate, please create a diversified portfolio. So whatever is the investable corpus, it is highly recommended that you choose to invest it across 10, 15, 20 different opportunities. Mr. Pranay Waghela has asked, will the recording of this session be provided? The answer to that is yes. You can find that on our YouTube channel as well as on our social media handles. Mr. Ritesh Kanani has asked, I had seen some T-bills on Giraffe a couple of months back. Are you planning more T-bills or government bonds? Mr. Ritesh, we do plan to bring some of these products or at least similar ones onto the platform. We are still undergoing a review of the recent SEBI guidelines, which includes permitting OBPs to do T-bills. So once we understand that better, then perhaps we can answer this question in a little more detail. I think another form of maybe the same question where people are curious to know whether there have been any defaults on our platform. But let me read out the question. How many deals Giraffe has done since inception, and what is the default rate till date? What is the post-default process? Can you throw some light on investment committee members?
See, in terms of I would say the counterparty which we have evaluated over the last 2 years is maybe around 400 to 450 counterparties which we have evaluated so far. Out of which around 20, currently we are actively working with around 40 counterparties, which is around like 9 to 10% of conversion, I would say. So we have a very rigorous credit assessment and committee approval process where we filter most of the borrowers. right now, in terms of how many transactions we have done with this 40 counterparties, it's around 600 plus transactions. And till date, fortunately, we had no default. In case of default, as we said, we have a lot of covenant in place where and also we have monthly monitoring process where we try to assess early warning signals where we can see any stress in the borrower, and we try to take preemptive steps uh, so that we can recall the facility if required, or in case of say working capital line, we'll try to reduce the exposure. So for number one is that we try to take a lot of preemptive measures to avoid the default. In case of default, we have all our documentation in place, and I mean, if required, we can take the borrower to NCLT and we can recover the money.
I think the last part of the question was, can you throw some light on investment committee members?
Okay, Prateek, I think you can.
Yeah, I think, Mr. Amit, at the moment, all the senior leadership, which is myself, Ankit, Saurav, Vineet, who are the founders, our head of investment, Vikas Bansal, who has about 15 years of experience, largely with Kotak Bank, and Jay Prakash, who also has a rich experience in financial services. We formed the investment committee at this stage. We do involve certain experts to guide us on a particular structured transaction if there is something that we need to take their help on, especially in complicated ones like venture debt or leasing, or if we are doing a mid-market structured credit transaction. So we do reach out to our well-wishers and people who have a lot more experience than us to guide us on those ones. But on a day-to-day basis, and for let me say more operational parts, these are the people who comprise the investment committee. There is a question by Mr. Arvind Kumar. Will the unlisted bonds show in Demat account? The answer to that, Mr. Arvind, is yes. All the bonds that you actually purchase from the platform, they will show up in your Demat account. These have a specific ISIN and will be accessible in your Demat account. Mr. Shaji Nair has asked, in the case of default, what's the further process from the investor's perspective?
So basically, if you see in most of our transactions, we have a debenture trustee in place who acts on behalf of the investors. And basically, Jiraaf play a role of who basically guides debenture trustee in case of any default on the covenant or default on the repayment. So debenture trustee will basically, on behalf of the investor, will approach NCLT and take the proceedings further to recover the money.
Perfect. Ms. Sukanya has a question or a suggestion rather. Could you add upcoming investments along with completed and ongoing, please? Sometimes we do not get investment notifications. So when we log into app, we can get to know if there are any upcoming investments. Ms. Sukanya, we take feedback on both points. One, we have to get our app live quickly, which we hope to bring to our customers quite soon. And the second, we note that we should have something called upcoming investments. That also depends on crossing all the bullet points and all the key factors to tie up the documentation well in time for any new opportunity. So we'll try and streamline that process and keep our customers and investors posted about upcoming opportunities as well. Mr. Hitesh has again asked, in case of assets-backed deal, I presume he's referring to any deal which has a collateral in assets. How will we make sure to have control of these in case of defaults? How do you make sure same assets are not offered to multiple sources of debt?
So I'll just take example of real estate projects. So generally what happens, so whichever project we fund, so we create a mortgage on that project. So it basically the charge on that project is registered with the registrar, number one, which is one checkpoint where the registrar will not allow us to create a mortgage as long as the project is already mortgaged to any other lender. Number two, we also create a charge on ROC, which again shows that, okay, the charge is created in favor of the investors, which again ensures that the same property is not charged to the other lender or other investors. So these are the key checkpoints where we can ensure that the asset is fully under our control, and in case of default, that the asset is asset, we can, if required, we can go and sell the asset is in total ownership of the investors. And simultaneously, before doing all this, we also take a legal opinion on the asset as well, which basically checks last 15 years of the title of the asset, whether there was any issue in last 15 to 30 years. We do a court search. If there is any underlying litigation going on the property, we also do a registrar search, which basically check whether this property is mortgaged to any other lender or not. So we have different processes in place where we do check whether the property is in our complete control and we have the legal title of the project of the property.
There is a question by Mr. Mahesh. There are other platforms like Grip, Vint Wealth. How does Giraffe compare with them? I think Mr. Mahesh, while we think we are progressing, I think it would be unfair of us to comment on Grip and Vint Wealth. They are both doing well, and we wish them well as well. Mr. Hemant has asked, what kind of contracts are signed among Giraffe, borrowers, and investors?
Prateek, you would like to take this one?
I think, Mr. Hemant, there are different products which will have different contracts. I will take a simple example of a debenture, in which case there are typically 3 agreements that are signed actually with the borrower and the trustee. And in each of our NCD deals, there is a SEBI registered trustee that is there to protect the interest of all the debenture holders. The specific documents are a debenture trust deed, a debenture trust appointment letter, and a deed of hypothecation, in which all the specific assets that are charged to those particular debenture holders, they are mentioned. And then when an investor comes on board, they take a securities transfer form from Giraffe, and that clearly states that all the rights that are inscribed in the DTD, the debenture holders will be party to it, and they will be able to exercise their rights as per the DTD that has been signed by the trustee. There is a question by Mr. Ajay, which says, is invoice discounting surviving because of refinance? What happens if people stop subscription? I think let us take that question in 2 parts. One is more pertaining to how deals come up on Giraffe, and Mr. Ajay and Ankit can shed more light on it. We do a very robust monitoring on a monthly basis, and that's why you would see certain borrowers come for a little while and then disappear for a little while as well. Because when we are not comfortable, we do not bring such borrowers to our platform at all. The second part is, of course, why does similar borrowers keep coming up on the platform for short tenor deals like invoice discounting? Ankit, maybe you can answer that.
So basically, if we have to understand this, it is basically not refinancing. So what we are trying to bridge the gap here is the working capital requirement of the borrower. Okay, so this working capital requirement, which is what they require over the entire year, right? So for example, if I say they have sanctioned a limit of 40 crore for or 50 crore for a borrower, so and the deal, when we take it live on the platform, it is for 60 days. So after 60 days, that working capital requirement is still there. Okay, so that is why that deal is again getting listed on the platform. It is not because it is refinance is required. And as Prateek has said, wherever we have seen any issue in our monthly monitoring review, we have also pulled down the line and we have reduced the exposure as well. So basically, borrower has paid back the money as well. As we said, there has been 0 default on the platform. So it's basically about the working capital need of the borrower. So for example, I sanction a 50 crore limit, and after 2 months, I say, boss, I will not do more deal with you. That working capital need is not fulfilled. So we have to look at from the requirement of the borrower as well, not only from the investor perspective, whether it is getting only refinance. Okay, so that is more critical, and that is what we are trying to also solve from the borrower perspective as well.
Mr. Ajay and a lot of others have also asked whether Giraffe is SEBI regulated. The clarity on that is SEBI at the moment has come out with guidelines only for online bond platforms which deal with listed or to be listed securities. On Giraffe, we offer variety of products which range from supply chain financing, commercial paper to unlisted securities. So at the moment, we do not fall within the purview of OBP. All our products, commercial paper, for example, is governed by RBI. Unlisted securities has a process laid out by the MCA, are governed by so all our current products are governed by the specific product regulations that are laid out and have been widely prevalent in the market. Now, with further growth in the OBP world and with SEBI coming out with various levels of clarification, we hope that we will be able to bring listed opportunities also to our customers. We are working towards that, and we'll keep our existing investors and customers posted as we make progress. Mr. Chetan has asked, do you have Android app to view the investment? Mr. Chetan, at the moment, the answer is no. We hope to put our app soon out to our investors and customers. So we'll keep you posted. Mr. Vipin has asked, please offer sovereign gold bond as well. Again, Mr. Vipin, our idea is to continuously broad base the level of offering that we have on the platform. So thank you for your suggestion, and we'll definitely try and work towards it. Mr. Parag has asked, does 100% invoice discounting deal is backed up by specific escrow account in which receivables from customer is received, or for some deal, money goes to vendor first and then paid to investors?
So 100% of the cash flow is routed through escrow account. So whatever money is collected from the investor, it goes to the escrow account, and then from there it goes to the borrower. And on the repayment side as well, we have an escrow mechanism in place where the borrower funds the escrow account, and from that escrow account, the payment is directly made to the investors. So entire money flow happens through the escrow account.
I think, Mr. Parag, in this case, there are various legs of cash flow as well, because the borrower that you see on Giraffe is also receiving money from its customer. So we are happy to maybe perhaps walk you through this. And I think this would be too short a time frame to actually go up and clarify that. We have actually had one webinar on specifically invoice discounting.
Yes.
I would encourage our audience to perhaps check that out, where we have gone in some detail and explained these structures as well. Mr. Neeraj has asked, what is the delay, not default rate, percentage of deal where the redemption was delayed in payment?
So again, the same answer we'll have. So far, we haven't have any delay in any of our repayments. And we have been fortunate enough, and we would like to just continue in a similar way.
Yeah, I think hats off to our team for actually being very cautious, and as well as expanding our portfolio with the amount of diligence that we do. Having said that, I think as we move forward, a delay might be inevitable where some of the borrowers will face these challenges. So we would once again encourage all of our investors and customers to create a diversified portfolio. From our end, of course, our endeavor is to not have any delays and defaults, and to keep our investors and customers posted on the same in case they occur. I think we are just short of time. We are now hit 7:45, so maybe we can take a couple of last questions. Mr. Devesh Gedia has asked, request to add more payment options like UPI for faster transaction execution. Mr. Devesh, actually UPI is in fact added, and you can participate through UPI. Mr. Sam has asked, is it compulsory to have a Demat account to do KYC process if I'm only interested in invoice discounting?
No, Demat account is only required in case if you participate in any of the corporate debt deal, where basically the NCD deals. So in case if you are participating only in invoice discounting, you don't need to have a Demat account to complete KYC.
And I think as the last question from Mr. Arvind, is there an option to withdraw the complete amount in any emergency case before the tenor?
As so far, right now, we don't have any option. So yeah, these are all hold to maturity debt product. So there is no option to withdraw the money before the maturity as of now.
I think with that, we'll have to call it an evening today. I thank the audience for their patience and for their questions. I do appreciate that there are a number of questions that are still pending. Please do write to us at care@giraffe.com and we'll be happy to answer them. Feel free to reach out to any of our team members as well, and we'll be happy to address these questions. Once again, a thank you from all of us for your time and for your patience, and see you on the next episode of Giraffe Connect.
Yeah, thank you. Thank you so much.